Good morning, one and all. I hope you are well, and I hope you had an enjoyable and a productive weekend. So, I have four pairs on watch this morning, and those are pound yen, Kiwi yen, dollar CAD, and Swiss yen. So, a lot of yen prevalence this morning. So, my favorite, I would argue, of the bunch is pound yen. So, we have this area here. We have this significant area of value there. We broke above, came to the downside, and now I'm just seeing this as a potential impulse correction continuation to push lower, potentially down to here and potentially a lot lower, because we have the kind of not so much a near miss, but we have a bit of a near miss to there, near miss to there, and then we have lots of near misses to here. Okay, so the more of those we get, the more likely this is to come to the downside. But regardless of that, what we can see, if we just zoom in a little bit on the weekly, we can see we've tapped into a little bit of an area of value, which we'll see as I drill down. But look at the profile of this. We have this uh, bullish candle here that gets completely retraced, and then we have this complete washout where we get the wick to the upside, and then price completely capitulates to the downside. But regardless, and this is the case with Swiss yen as well, I'm more interested in the fact that if we just take this move from here to here, we've retraced over 50%, over 60, more in the region of sort of 80, 90%. So the chance of this now filling at least this low becomes very, very high. This is not, even though, even though you could look at this and you could say, well, there's a bit of a gap there. There is, but if we're going to fill that gap without taking out a low such as this first, we don't normally retrace 80 to 90% of that move. So this, when we've retraced that much of a move, this is not an impulse correction continuation to take out that high that we near missed to. This is a complete capitulation to likely take out that before we potentially do that, if we even do that. So that's just the thinking behind that. So as I drill down, you can see there was almost a bit of a trap to go long here. People tried to get long and got completely washed out. Okay, so we do tap into an area. Okay, we do tap into this area here. There was some. I don't know why it keeps doing that. We do tap into that area there where there was a sell-off, a bit of a sell-off. Bearing in mind this is the daily chart, and then we get the scoop double top at that area. So we do wick through it, but a lot of the wick was below. Okay, so it's not surprising to me that we come back, fill the wick, then we get the impulse correction continuation. If we just zoom in here, so I'm seeing this as a impulse correction continuation to push lower. Okay, if we just analyze the pieces of the puzzle still further, so you can see here we have the scoop double top. We then break above that. We get an impulse correction continuation to push lower. We kind of have this. We kind of retest this area here, break to the downside, retest the back end of this. Okay, all of this volume here. We then move to the downside. I'm not surprised what's happening now. If we just zoom in to the pieces of the puzzle still further, so you can see here we have this. There's a little bit of consolidation there. We tap into that middle section. Okay, we have this correction, this one here. I'm not surprised that we appear to be gravitating back towards here. And the reason being, if we just get all of that off the chart, the reason I'm not surprised is because we have with this volume here, okay, and notice how this footprint that was left, this sharp footprint, where there was a big sell-off, which means there's likely liquidity there, notice how that failed to retest the back end of this. So I'm not surprised that price is doing what it's doing now. Okay, and now I'm just seeing this as this move here, okay? It's 1, 2, 3 into that area there. Doesn't surprise me in the slightest. So what are we looking for from this pair? And there's an important distinction I'm going to make here as well. So I'm looking for a tap into this area, not a risk entry from the edge of structure. I'm looking for a tap into this area of value. I don't know why the brightness of my face keeps changing throughout the video, but anyway, I digress. Tap into this area of value, then a push down, and then a correction such as that, a 5-minute or a 15-minute, and then I would look to get short on the breaker within it. And then I would look to target this low here, and now the chart's moving for some reason. Okay, and that would be my target. The sequence has been, there's been lots of these big scoop scoops back up. Okay, so I'd be, all things considered and considering the sequence, how it's been moving, I'd be happy just to set a take profit down here if I could get my minimum take profit requirement, which is 5%. Okay, and the reason I'm not looking for a risk entry is because, specifically because we've come from a move up. Okay, we've come from an impulse correction continuation. If this does something like this, okay, where it forms more of a base, and we've not come from a move up because the move up has been negated by the fact that we've come back down and retraced most of it, rather than having this impulse correction continuation, then I would consider a risk entry from the edge of structure, but not until such times. Okay, and the reason that's relevant is because we've got a similar thing going on with Kiwi yen, which does have a base, which is why I'm looking for a risk entry from the edge of structure. But we'll talk about that when we get down to that. So that's what I'm going to be looking for from pound yen. Okay, I'm going to leave that forecast on the chart. The alert is set just below the area of value. If that doesn't trigger, I do not need to check this pair at all. Okay, so Kiwi yen is a slight little hedge play on the yens as a whole. So the deal looks quite similar on the higher time frames. We have this high, we have the near miss to it. We break above, we move to the downside. Okay, with that impulse correction continuation to push lower to potentially take out. We have lots of near misses to the start of all of this volume. Okay, we have a near miss there to that low. However, in pursuit of that, we could capitalize on a move to the upside. And the reason being is because if we just zoom in, so does price have a reason to move to the upside? Yes, because it has potentially, it has tapped into this area here, okay, and we moved away aggressively. Okay, we have why my voice keeps doing this. Sorry, we've tapped into this area here, okay, where look at the aggression that we moved away from that area last time around. Okay, yes, there is a bit of a gap to that low. It would have been better if we'd tapped into that as well, but we had a significant move here. There was a lot of aggression from the area last time around, and we near missed to it. That's the other clue that this might be an attractive area of value, as is the fact. What's going on here? Okay, now the paintbrush tool isn't working. Okay, right, there we go. As is the fact that we also have a 1, 2, 3 leading up to that area. Is there any other reasons why price might move to the upside? Well, yes, because this high narrowly failed to retest the back of all of this volume here. So there's always the possibility that this could do that to give us that, which then taps into the back end of that. Okay, so I'm stacking the confluence factors here. At the moment, this is not the most impressive daily close we've ever seen, but this could be the start of that kind of morning star formation to push up to there. I then drilled down. Okay, we moved away from the area with aggression. Okay, we tapped into the area of value and moved away with aggression. That's suggesting that we may have tapped out a lot of liquidity there. Okay, the thing to consider though is because this could quite easily turn into something like this, similar to what we've just showed you on pound yen, and do that, and then do that, and then we would have that 1, 2, 3 to push lower, especially as all of these highs failed to retest the back end of that. This could be a bear structure to push lower. Okay, so but you have to remember that the higher time frame takes precedence. Okay, so I'm factoring that in as well. So what negates all of that? Well, what negates all of that is if we break above this area of interest here. It's not looking like we're going to do that at the minute, but because we've moved up correctively, we may be forming, the fact that we're moving up correctively may suggest that we're forming something like that to tap into that to then move lower. However, if that gets negated and we suddenly impulsively break above here and we get the 15-minute continuation afterwards, that will likely form through that high to the left, okay, which would render that irrelevant and suggest that there was not enough liquidity there to send price to the downside. Okay, if that happens, then I will be looking to get long either on the break of the correction or within it. Okay, I'd be looking for a 15-minute correction, and then I'll be able to manage it up to what's going on here. Okay, I can't seem to get that off the screen. okay, I'll be able to manage it up to this high. And the reason that's significant is because, try that again, we have all of this, okay, and this high here was the one where we aggressively dropped out of all of this. So there may be liquidity there. So I want to be able to manage it to there, which I can for something in the region of 2%, according to this, assuming everything stacks up. And then what I would do is target that high there for 5%, set the take profit in that area, and then trail my stop loss at the same time. So I have, you can see we're moving down now, but I have an alert set. I'm just going to reset that because that's moved. I'm going to set that just below the area of interest. And if it doesn't trigger, then I don't need to check this pair. Simple. Okay, so that is Kiwi yen, just speeding up ever so slightly. You have to be aware of the time on these things. So dollar CAD on the higher degree, okay, if we just take the whole picture, we have a near miss to this very significant high there, and we have retraced. We have retraced now. Look where we are. We've retraced like 80-90% of the move. So as I said with pound yen, it's very likely that we will take out this high, that this high near miss too. Okay. However, in pursuit of that, it doesn't mean to say we can't capitalize on a move to the downside. Okay. Why would we be moving to the downside? Well, if we just zoom in, okay, what do we have? If we just analyze this, I like the fact that even though this is kind of counter trend in some respects, what we have is the mechanical psychology that we look for and we typically see. Okay. So we have a significant high here. We near miss to it. We near miss to it again. Then we break above. I specifically like the fact that we've broken above and not just tapped into the area. We've broken above. This could be a move to the downside. Is there a reason why price would move to the downside? Yes, because of all of those factors and because this narrowly missed the base of that. So in pursuit of that higher time frame direction, we could be seeing a move down to here to tap into the high, to the low that we near missed to before that higher time frame takes precedence. And so long as there's enough risk to reward there, that makes this any short trades a viable option. Okay, on the 4 hour, I like the fact that, look at this, we broke above. Look at this 4 hour candle there. Okay, this is a washout candle. Okay, so we have this bearish high test candle, massive wick above, suggesting a grab of liquidity. It closes very bearish with very little to no wick below it. You've got to remember that's an exit candle for many people. We even have that element of a 1, 2, 3 leading into it. Okay, I like that as well. So now I'm just looking for entries, and we just analyze this on the fly. You can see what we're doing here. We may be tapping into this area here. Okay, so let's just sort this screen out a minute. So we have the base of all of this. Okay, we have this little consolidation there. You can see that we've near missed to it. So what we may be doing is we may be getting something like that to give us that, to tap into that consolidation, which gives us this, okay, which retests the back end of all of this. And if we just get that off the screen. So what I'm going to be looking for, I have set a Google Calendar reminder to remind me to check this, okay, but what I'm going to be looking for is I'm going to be looking for a tight 15-minute continuation. I wasn't looking for a 5, specifically because we are typically counter trend on the higher time frame. So I'm factoring that in, because you take a 5, you increase the likelihood of you being tagged in, tagged out. But this is, in my experience, weighted enough for me to be able to take the entry. And then I would be able to manage this down to there for 5%. I wouldn't be setting a take profit here because I don't see this as a strong enough area that people, the bigger players, will be looking at for it to suddenly start moving to the upside from there. I would anticipate, all things considered, a move down to this area. So what I would do, just looking at the time, I would set the take profit at the 90% area, or the low just above it rather. Okay, whichever falls the sooner. That's my rule. Either at the 90% area or the low if it's sat just above it. If I'm looking to get short, set a take profit there. I would trail my stop loss at the same time. That is where price can pull back deeply, even if it's going to continue in the forecasted direction. It will often pull back 50% of the move, which would be 50% of the range would be there. I don't want to sit through that kind of pullback. So that is what I'm going to be looking for there. That would give us something in the region of 11%. So that is dollar CAD, and then moving on to the last pair, Just checking my mixer is still on because it turned itself off during the sound check this morning, but so far so good. On this one, so this is a little bit more. The reason this is lower down is because we haven't really, you can see we near missed to that area there. Okay, we near missed to an area which we haven't done on the other pairs. So that's why this is lower down. Okay, and you have to remember the reason this is on watch is because in terms of this move, as with the other pair that I showed you, we have retraced 70 odd % of that move. So this is not indicative of, even though we have a near miss to that high there, this is not indicative of a move that just suddenly does that when it's pulled back this much of the move. What it can do, however, and especially when it's a pair like Swiss yen, is because it's missed an area of value like that, what it can do is it can move like this. Try that again. It can move like this, and you get that this swinging nature. Okay, and partly what that is people trying to sell this, but the liquidity that was near missed. Okay, so if these highs have near missed here, there's potentially liquidity there still dragging price up each time positions are liquidated within the market, which is why you get this rather than the more direct moves like that. Okay, that's one of the reasons. There's obviously loads of variables, including unknown variables as well. But what we can see, and what we do typically see, is that if we get a move like this, so an overall corrective move down, and then we get a flat correction underneath, which is what we're getting at the minute, or ever so slightly through, that is typically when price drops out of all of this, okay, when we get the flat corrections afterwards. So what I'm going to be looking for from this pair, and with 3.5 minutes left of this video, you can see there, did we tap into that? So what we have here, so with this consolidation here, this is my preferred area of value because there was a consolidation here and a sharp sell-off, whereas this was a more corrective sell-off, okay? We've correctively sold off from this area, but when we last time around, there was an aggressive sell-off from here. So that's likely where more liquidity is, okay? And the other thing that's given me the clue of that as well is the fact that we're building volume here, and likely enough volume to give price the legs if we break out of that to tap into that area. So what I'm going to be looking for from this pair with 2.5 minutes left is if price taps into my preferred area of value, then I'll be looking for a 4-hour risk entry, so a risk entry on the 4-hour chart. And then I would look to get short with a rejection, high test, or a retrace candle. If we only tap into this one, which we could do because this high is actually sat above this high, and this is also above it, but only ever so slightly. Okay, so this may not necessarily be relevant because it's above this low. Okay, so if we only tap into this one, then what I'll be looking for is a 1-hour impulse down followed by a 15-minute continuation. And the reason I wouldn't be looking for a 5 is because with that sat just above that one there, you could be tagged in, tagged out, price taps into that, and then it moves, and then you're frustrated. Okay, so that's my thesis behind this. And the reason I would look for a risk entry from the first area of value is because, once again, unlike with one of the other yen pairs, I've forgotten which one now, we haven't come from an impulse up. We've just correctively moved up. Okay, so because we've correctively moved up, we may continue to do that. This may take some time to get up to there. Okay, but I would be happy to take a risk entry because we haven't come from an impulse up after this correction was formed. So that is what I'm going to be looking for from these pairs today, folks. And then I'll be able to manage it down to these lows. And then I would be targeting, just because it doesn't look like we're going to get 5% from that, I'll be targeting this low down there and then trailing my stop loss accordingly. So that is my thought process today. I hope you've enjoyed this video, and I hope it has provided you with some value. And I will see you again in the next one, which will likely be made tomorrow morning. Enjoy the rest of your day.